Hey, Wealth Builders, it's your private money syndicator, Nick Billions, here with another private money real estate drive-by educational video brought to you by the Mills Funding Group LLC and the Apartment Acquisition and Asset Management Company. And today we're talking about the power that our hybrid return program gives your investments and retirement funds. As always, we have a disclaimer to cover ourselves. We're not lawyers, CPAs, or security professionals. This info is purely based off of personal experience and opinion and should be consulted and verified by your attorney or CPA before moving forward with any mentioned investment strategies, and is purely educational only and not intended to present or market any securities opportunities. Okay, for more of what we do and what we offer as a company and how our program and benefits and education can benefit you as a investor, go to our homepage at privatemoney.vanitcompanies.com. You want to like and subscribe to our Facebook page at facebook.com/private money savior, and like and subscribe to our YouTube channel at youtube.com/Mills Funding Group. Now, getting started, if you were to commit $100,000, now the asterisk means that you have to complete at least one funded syndicated deal with us before the value of your money to a certain threshold can qualify for a single investment fund, and in this case $100,000. Now with $100,000 we can find about $500,000 value of real estate, and it's not as much of value with apartment units that we can get where we can minimize the most risk and maximize the returns. So we'll stick to the single family side here, where we get 20 single family homes at about $20,000 each, which with the $100,000 will leave about $100,000 for fees and repairs. Okay, and with $650 a month in rent at average for all 20 single family homes that we assume to be 100% occupied, that'll be $13,000 a month gross. And with a 4.5% conventional fixed rate mortgage based off of national values, that we're at about $25.71 a month, and then we subtract the 25% of our cash flow intake of $32.50 a month. That equals $7,179 a month. Now from there you also subtract another 20% from that remaining gross rent amount of $1,436, and that leaves you with $5,743 a month net, which is your money. And off of a $100,000 commitment, you will receive $68,916 per year in cash flow. Okay, now on to the next one. We do it up to $250,000, and again you have to pool your money in a syndicated deal first if it's $100,000 or $250,000 investment before we take the money and say, hey, Mr. Investor, we can make you a sole investor on a bigger deal where you can get bigger returns on a monthly basis. We'll put the deal into $1 million worth of real estate, and with this time we can go and find a 70 to 100 unit apartment complex where we leave $50,000 to the side for any fees and repairs, for any acquisition fees up front, and any repair allowances to get our equity build up process going. Now, for the worst case scenario, we always find properties at the lowest that has at least an 80% occupancy that we can work with, that creates a good position for a good value add. So in this case, 55 units will be 80% of the 70 unit apartment complex, and we take the $650 a month average per unit in rent. That equals $35,750 a month gross. Now after the debt service and expenses monthly, that's approximately $9,964 in cash flow monthly, and 60% of that, which 40% goes to us, 60% is yours. That's $5,978 a month, which equals $71,736 a year. Now with 100 unit at 80% occupancy and the $650 average per rent, we have $52,000 a month in gross rents, and after debt service and expenses on a monthly basis, you got about $12,979 left, and 60% of that is $7,787, which equals $93,444 a year off of a $250,000 investment. Now, if you were to commit $500,000, which with our hybrid returns program, you don't have to do a syndicated deal with at least a $500,000 investment before you can be a sole investor on a monthly cash flow deal. That would be we'll put that towards 20% of a $2 million real estate deal, which be anywhere from 100 to 200 plus units, probably 218 or 220 at the most that we can find in any of the good emerging markets. And we leave out of that 500,000 about 100,000 to the side for any acquisition fees and repairs. We'll take 128 units, which is 80% of 150, and $650 a month average in rent, $83,200 in gross. After debt service and expenses taken out, you got about $20,767 in cash flow, which 60% of that is $12,461 a month, which equals $149,532 per year for you. Now we'll go up one more huge level at $1 million. Okay, and we take 20% of that on a $4 million deal, 100, 200 units. 200K is left to the side for any fees and repairs, and 162 units, which is 80% of 180 unit example that we have at $650 average monthly rent. You got 105,300 gross after expenses and debt service, which the formulas you can check back through this video at the $100,000 and $250,000 example. You have $29,315 cash flow monthly, and 60% of that monthly is $17,689 a month, which is $211,068 per year, which without my calculator in my head, I think that's a little bit over 21% return on investment per year, just with $100,000, just with a $1 million investment. Now, the alternative for all the examples, what we do is our bigger, better deal is that we will syndicate and create a funding LP pool on several big single investments together, and we will purchase a big emerging market cash flowing apartment portfolio of about, anytime we do that, we always try to look for anything over 300 plus units, anything from 300 to 1,000 or more to keep our maximum leverage of equity put into it at a minimum with the highest return. And some cases we may even find a residential portfolio where we have enough houses in that portfolio that will supply enough cash flow monthly to support a property management company to efficiently manage that portfolio. And with this bigger and better deal example, you have higher equity increases, which gives you higher returns on refi and resale and higher cash flows. You got bigger deals and bigger tax benefits because of that, and more minimized risk per unit, because now we have several hundred units. The risk is maintained across the board, where we can average out a 90 to a 95% occupancy with a pretty good cash flow coming in monthly. And you don't have as much risk because you got a lot of units that are occupied at one time, okay, which maximizes that equity that's been placed into it, which is your money. And we get to own more properties with your money by pooling it. For example, your one investor unit of a $500,000 return, I may have, for instance, 8 investors to come into each to pay $500,000 each, which would be a $4 million pool for a $18 million portfolio. Okay, you get to look at it this way. Your $500,000 investment can get you involved with over $10 million in real estate. Okay, I don't have to tell you how sweet it is. You're pretty much doing that yourself. All right, that's it, people. That's another real estate private money drive-by educational video brought to you again by your private money syndicator, Nick Billions, from the Mills Funding Group LLC, an apartment acquisition asset management company. And again, for more of what we do and what we offer for this video and others to educate you, you want to go to our homepage at privatemoney.VanEckCompanies.com. You want to like and subscribe our page at Facebook.com/Private Money Savior, and you want to subscribe and like our YouTube channel at YouTube.com/Mills Funding Group. Thanks again for your time to this. I look forward to educating you on your next video.